Hello, ladies and gentlemen. Welcome, fellow investors, and thank you for watching me and for continuing to follow me. My name is Joseph Areu. I am your investment advisor on matters passive investing with the ultimate long-term objective of ensuring that you have financial independence and financial stability in your lives. As always, please remember to subscribe, to like, and to comment on anything that I talk about. Give me a call or send me an email. Now, ladies and gentlemen, there has been quite a bit of activity in the bond market, at least in the Kenya corporate bond market. As for the treasury bond market, that continues to go on. And I know a lot of you, or many of you, are very keen, very interested in bond investing. And so I thought today I would remind you or try to get your attention on some key aspects of bond investing, some of the key parameters or metrics that you want to make sure that you understand. And the first one I'm going to talk about is the concept of bond pricing. What is the price of a bond? Very simple terms, ladies and gentlemen, again to remind you, when you buy a bond, essentially you're buying what we call a face value, which is payable to you over a period of time, which we call the maturity period. That could be 10 years, could be 5 years, or could be 20. Now, the price that is essentially how much money you are paying today at the time you're buying that bond or that face value to be able to be paid that value at maturity. So the value could be 10 million shillings, depending on whichever currency, whether it is rand or birrs or Uganda shillings, Kenya shillings, or cedis, whatever currency. So there's a certain amount of money that you expect to be paid at maturity. The question is, how much are you paying today in order to get that money at maturity? What you pay today is essentially the price of that bond. Now, that price is usually expressed out of every 100 units of the currency of the bond. So if it is shillings, it will be expressed out of every 100 shillings. So for every 100 shilling of the face value, how much are you paying today? So you could be told that the price is 100. That means essentially for every 100 shillings, you are paying 100 today, which means you are paying 100% of the face value. So if the face value is 10 million shillings, 1 million shillings, in a given period of time, you are going to be asked for 1 million shillings or 10 million shillings or whatever the amount is today, 100%. Sometimes the price could be less than 100. You could be told that no, the price is say 97. That means that for every 100 shillings that you are getting in face value, you are being asked for only 97. Again, essentially saying you are being asked for 97% of the face value. Now, sometimes though, the price could be more than 100. So just to step back a bit, when the price is 100, we call that par, P-A-R, par pricing. The bond is priced at par. When the price is less than 100, we call that discount pricing. So the bond is priced at a discount, 97, 98, 95, whatever. It's as long as it's less than 100. Sometimes the price could be higher than 100. It could be 102. It could be 103. That is called premium pricing. So they are telling you that for every 100 shillings or 100 whatever units of currency, cedis or naira, that you will get in face value, you are being asked to pay maybe 102, 103. So again, that's like 102%, 103%. That would be premium pricing. Okay, so that is essentially what the pricing of a bond means. And when you are buying a bond, it's not just sufficient to want to know, okay, how much you want to invest. That's what many of us think about. Think also about the price. Obviously, the lower the price, the better. If it's a discount, that is good for you. But also, a discount price sometimes means maybe the credit worthiness of the bond of the bond issuer may not be so good. So think about all those the implications of a discount price as opposed to par price, as opposed to a premium price. Whatever it is, the price is basically what you are paying today for the face value that you expect at maturity. In my next video, I will talk to you about the yield of your bond. But for now, thank you very much for watching. Once again, do remember to like, subscribe, and if you have any comments, please send them over to me. Thank you very much.